Hi, everyone. I'm Will Osborne
I'm
with
Jason.
Madison Trust. Of course, I'm an account executive.
I'm Jason. Nice to meet you guys. Thanks for joining in.
Yeah, and as Alberto said, we're going to be covering real estate syndication investments through a self-directed IRA. So let's dive in. So, Jason, if you don't mind, why don't we just go over the basics of
Sure.
self-directed IRAs?
Yeah, so self-directed IRAs, that is what we specialize in. So it really what makes us different is we allow you to invest into alternative assets. So this is things such as maybe a real estate project, maybe it could be precious metals, private company. It's a wide range of different things that you can get into. So I mean, the focus today will be real estate, of course. So we'll be diving a lot more into that. But really, the two choices here is one, you'll be working with Madison Trust Company in either a custodial account here where Madison Trust really helps keep everything together. So that'd be looking at your investment docs, make sure things are okay, through helping you place your investment and really holding it as an asset here. And then some of our investors will have a checkbook controlled IRA LLC with Broad Financial. So we'll address everything today, but just a little rundown.
Yeah, exactly. At the end of the day, we hold everything that isn't publicly traded. So, particularly real estate syndications or real estate in general. And as the custodian, we're taking care of all of the administrative tasks. So, processing transactions, reporting to the IRS, ongoing support. That's our role to make sure this is compliant and everything remains tax advantage. So, a little bit about what Madison Trust does, and we'll dive into the checkbook stuff too
Of course.
as we go on. So, here we go. What is a real estate syndication? So at the end of the day, it's a structured partnership that allows passive investors to invest in real estate. Typically, the syndication is focused on one particular property or project, or maybe a small portfolio of properties. Whereas a REIT, which you can get on at really public exchanges, it's more broad. It's less personal, if you will. Um, Typically, these syndication investments are structured as LLCs or LPs, and they're private placements. So these aren't registered with the SEC necessarily because of uh, certain rules under the Securities Act. So when it comes to the sort of review of the investment on our side, we do need to look at investment documents. Since these are typically private placements, we look at a private placement memorandum as well as a subscription agreement. And these are typically equity investments. So the IRA is going to be a member of the, let's say, LLC, for example, if it's structured as an LLC, or a limited partner in the LP. And that's opposed to the actual individual being the member or limited partner. So we make sure the titling is done correctly. We do this all the time. That's our role in the first place. And again, the IRA is a passive investor here. So there's typically a sponsor or a general partner that's overseeing the purchase or the acquisition of the properties under the entity, as well as the operations and management. So just a brief overview. Anything you want to add,
I
Jason?
think you covered most of it. I mean, Madison Trust, we would be in touch with both you as the investor and likely somebody on the other side of the project called a sponsor.
I'm glad you brought that up
Yep.
because we do have a sponsors team here that deals with general partners or sponsors directly for these investments. So typically, without a sponsors team in place, the client is the middleman between the custodian and the actual investment, which can cause headaches. So we basically take over from there. You can provide a contact at your investment or syndication, and we can correspond directly. So just I thought I just mentioned that. Yeah,
Yeah, totally.
that's not on the slide.
It helps streamline the process wherever we can. So,
Exactly. Yeah.
yep. But yeah, what syndications tend to appeal to retirement investors? So really, this can be a wide range of things we're talking about. I mean, if you see there apartment buildings, it could be commercial, it could be residential things, but real estate syndication deals normally means something bigger. So it really depends on the use, but there's different developers, different deals, maybe different sets of rates of return. The risk is up to you, given it is a self-directed investment. Really, all we look for over here is who's involved, making sure that there's no prohibited transactions. Typically, you're fine unless there's a close family member involved or any personal side to things. So most of the time, it's just a pretty quick multi-business day review process. If we need anything else, we'll let you know. But really, just that PPM, that private placement memorandum, subscription agreement is really all we're looking at for the most part. But the idea is you can use that self-directed IRA bring some money over. If it's a transfer from a current IRA, if it's a rollover or contribution, you would move that money to Madison Trust, and we would help place it in your tax advantaged account so that way you can kind of seek the benefits of that.
Right, exactly. And in terms of the appeal of a syndication, they typically focus on a particular property or geography or real estate type. So if you have a particular sort of, one of those sort of characteristics in mind specifically, this is the way to go. You're not going to get that type of specialization with a standard or more conventional IRA elsewhere with a REIT. I know that they can be sort of um, uh, I'd say nailed down to more specific asset types, but this is going to be the closest you're going to get to investing in real estate without actually owning the real estate. And your role is passive. Again, I like to mention that you don't have to act as a landlord or deal with the acquisition or management, and all the same tax advantages apply that would normally apply to an IRA, regardless. Yeah. So, as with pretty much all investments that you would place through a self-directed IRA, diversification is the main benefit. You're getting out of the stock market, you're getting out of money market funds, the typical investment products that we're all used to. So you're diversifying in this case into real estate, and even further into specific geographies or types of real estate, as I mentioned. You're still getting all the same tax advantages. So traditional IRA, everything's tax deferred, all those earnings. Roth IRA, tax free, as long as you meet certain criteria.
Totally. And just one more point on diversification. So some people will ask, hey, can I do a regular, like a full transfer or full rollover? Could I do part? Answer is yes. It is up to you how much money you bring over here. Either which way, our fees are flat rated, so it doesn't matter how much money you bring over. But yes, you can have your everyday IRA still invested in stock and have this as an additional thing to help diversify a bit more.
Right. Really good point that you
Mhm.
brought up, because you can have multiple IRAs, the Madison IRA for your more exotic investments, and then your standard IRA for the things that you're more than likely already used to. Um, and yeah, again, this is a passive investment. We have clients that will buy real estate directly with their IRA. Perfectly fine if that's what you're looking to do, especially if you're experienced in investing in real estate. But if you simply want to have a passive role, have cash flow coming in, going back to the IRA, some equity in the deal, eventually get some appreciation, this is a fantastic option. And you don't have to put up as much money as you would if you're buying a property directly. Typically the minimum investment I've noticed, I don't know if you've noticed the same thing, sort of that $50,000, so
Exactly.
that you can absolutely go higher than that.
If you have a good connection though, sometimes developers will, hey, maybe I'll let you get in for a little bit less. Or if you're aggressive and you do want to get in for more, I'm sure they're welcome to bring in more money on.
Exactly.
So, part of it will be, I mean, we help streamline it to get you into the project, but you'll still be able to be in touch with that sponsor, with that investment to see how much money you can bring over and really what your goals are. Sometimes they have different projects and maybe this one's not the right fit. They might have a new project coming up, and we have a lot of investors who will start off in one project and end up with two or three with the same or different developers. Really up to you.
Yeah, exactly. And that's another important thing. You typically with these syndications, you have somewhat of a relationship with the sponsor. So you're kept up to date with how the project is going, where things stand. Whereas if you're in a larger fund or maybe a REIT, that's just not you're not going to have that access to the individuals managing the investment. Yeah. So there are a few things to consider here, just like most all self-directed IRA investments and alternative investments in general. There can be a tax that applies here, especially for syndication. So it's as you can see there, the unrelated business income tax, commonly referred to as UBIT. So this can come up if the syndication is using leverage to purchase the underlying property or properties. So any income attributable to that debt financing would be subject to this UBIT tax. And depreciation and other deductions can offset that income so that the UBIT isn't as high as it would be without it. So keep that in mind. But this is something that you should keep in mind before investing in a syndication through an IRA, because normally the IRA is not paying taxes. That everyone knows that, but this is a particular circumstance where the IRA would be paying a tax. And This is a great conversation to have with a CPA, by the way, because as you can see in our disclaimer, we are completely passive. So we're simply making the investment possible and maintaining the IRA, but we're not providing any advice, especially not tax advice. So just want to make that very, very clear from the start for anyone who's looking to sign up. Um, Definitely important to make sure that the sponsor can accept IRA funds. They may not have accepted IRA funds in the past, but that doesn't mean they won't accept it now, if you will. Some might have particular reasons why they won't. That's completely up to them, but it is important to make sure that's something they're willing to do. Um, and yeah, you want to take over
Yeah,
from there?
and as well, just on that second point there with accepting IRA funds, I know some of you guys may already have an existing relationship with a certain developer, let's just say, and it's very possible that developer you might still be able to work with. Maybe they have a new deal, and a lot of times for that sponsor, they are looking for their current investors who they already have a reputation with to get the ball rolling for them. So that way they can dip their toes into using IRA funds, and maybe that will help streamline and open up the opportunities for other new investors too. So
100%.
it's a great start.
Definitely. That's where our sponsors team comes in, or
Yep.
even Jason or I, to potentially talk to these sponsors or developers to let them know what we do and how we can help in terms of raising capital. And, again, this is going on to the third point there, but since we are passive, client will be doing their own due diligence. We're somewhat involved in the due diligence process because we want to make sure there's no prohibited transaction taking place. So if we see that a family member or the actual client themselves is involved in the management of the investment or the syndication, we may ask for an attorney letter, for example, or we may flat out reject the investment because there are rules to keep in mind per the IRS that prohibit certain investments if it's going to lead to self-dealing or any benefit to you now rather than in retirement. And we do have a webinar that you can find on our website that goes over prohibited transactions. So not really the point necessarily of this webinar, but definitely worth mentioning if that applies to you.
Yep. And just on a quick brush up, a couple of people to look out for is that self-dealing between you and yourself on both ends, the spouse, your kids, your parents, grandparents, anybody in that direct line of family. If you ever have questions on that, something you can definitely reach out to us on.
Exactly.
Cool. So I'll take this one. So really, how do you get started with us? You're at this stage of watching a webinar. How do you get from point A to point B of actually placing that investment? First off, you'd probably be in touch with Will or I, or somebody else on our team to learn more how to open up this account, answer any preliminary questions, maybe about getting your funding over here. Do we have the deal all set up already? So really, ultimately, once we get you through that first part, it's going to be about opening your account. It's a very easy online client portal application. You'll have your own private login. Application only takes a few minutes to get started on. And once that account is opened and approved, approval is a pretty quick process as well. Then we'll have you start working on funding. So that funding, again, could be that transfer or rollover where we'll help initiate it. If it's a transfer, we might be able to pull it directly. If it's a transfer with a current custodian, if it's a rollover, sometimes they do have you mail a check, which in turn you would then mail to us. But we'll cross that bridge when we get there. Each place is a little different. But once that money is over here, and assuming that the investment is already approved, we typically work on that approval while working on your funding at the same time to help streamline and shorten that process for you. And then once that's all set up, you'll put in a trade authorization form with us, and then we'll help you push that investment through.
Exactly. Yeah. And that's the last step, the invest. That's where we're looking at those documents, the private placement memorandum or the LP agreement, just depends on the structure, as well as subscription documents on which will help you list your IRA as the investor. And trying to think if there's anything else I want to mention. I think we've really covered it. It's a pretty
Yeah.
simple process, honestly. And I'd say 2 weeks is pretty fair. Have you noticed that?
Definitely.
2 weeks
Yeah.
from opening the IRA to placing the first investment, especially if it's an IRA transfer, because you fill out a transfer form with us, we take care of the rest. Funds are usually here within a week or maybe even less. For a 401k rollover, that can be a little bit more, not cumbersome necessarily, but just takes longer because I'm sure you've seen
It's
this
the
a million
post office.
times.
It's really it.
Exactly. Yeah, they're
Don't
sending
blame
us
us.
exactly. They're sending us checks. It doesn't matter who the administrator is there. It's tend to send checks to the client first, and then the client would send the check to us. So it's definitely common. So don't be alarmed if that happens to you, but just something to consider in terms of timing. Now, this is the checkbook option. which is a little bit different than the sort of standard custodial version that Jason and I just went over. So in the beginning, it's going to be the same thing. You're opening the Madison Trust IRA first, no matter what. The second step, I would actually put create in front of fund, but you could do either. You could do it in either direction. But typically, you open the IRA, then you're setting up an IRA LLC or an IRA trust. And again, this is completely optional, but setting up one of these entities will give you the ability to manage your own IRA funds without getting Madison Trust involved. So in terms of placing investments, there's no longer a review process by Madison Trust, which is a double-edged sword because all the due diligence is going to be on you. You need to make sure you're not getting yourself into a prohibited transaction. But at the same time, you have all the freedom to invest as you see fit. You have real-time access to the funds without getting Madison involved. So step two, again, it's an online application for either the LLC or the trust with our sister company, Broad Financial. And then from there, while the trust or the LLC is getting set up, might as well start the funding process. So that's where we do the transfer form or the 401k rollover. And once the account is funded with Madison and the trust or LLC is set up and the checking account set up, which we help with, by the way, we send the funds to the LLC or trust. You take over from there in terms of investing. So making a new investment is as simple as cutting a check or sending a wire from the LLC or trust checking account. And what are some of the differences between the LLC and the trust, if you don't mind going over that?
Yeah, so pretty much the LLC, it is a state filed entity. So it typically means it comes with that layer of state liability protection. So that could be your home state in a very common situation where you might be able to put your personal address as that registered agent. Some people, they might want to file with a different state. For us, that is totally fine. There's strategic reasons behind that for each person. Depends on what your goals are. But yeah, we'll help out with it. You can always ask us questions and then each state has a different price for the LLC annual fee, something that you'll be responsible for ultimately. Some states cost less than others. Some states are known for, say, better privacy than others. But I would say most often we do see people trying to use their home state wherever they can and save some money.
Yeah, definitely. I see that all the time.
But a trust is known for a bit more privacy because it's not safe filed. However, that means because it's less private or it's more private, it means it doesn't really have that layer of protection from a certain state. So it just really depends what your goals are. But the good thing with a trust, on the other hand, is that because it's not safe filed, there is no annual fee that you have to worry about with any state. Setup cost overall is pretty similar. It's within $100 of each other. It's just there's no ongoing cost for a trust versus an LLC. But a lot of states, they do have very low annual fees. Some states are zero. Some states are under $100 a year. So yeah, it's really just a matter of personal preference at that point. But either which way, the job can get done for most situations.
Yeah, exactly. Investing in syndications or really any asset type you can do through the trust or the LLC. But what it really boils down to is, between the two entities, the LLC offers liability protection, and superior liability protection relative to the trust. Whereas the trust does not offer the same liability protection, but it is an easier entity to maintain because there are no state filing requirements or state renewal fees. And there's that added privacy because LLC documents like the articles of organization are public record, whereas the trust documents are not. So if you're just getting into a few syndications, maybe the trust is a better option.
Mm-hmm.
But if you plan on being a little bit more active or, would rather have an LLC in general than a trust, then the LLC is completely fine structure to use as well.
Totally. And just on that as well, just want to be crystal clear. The job does get done in a custodial account or a checkbook control account.
Exactly.
Either which way is fine with us. It's just a matter of up to you because in a custodial account, there is like additional asset fees. So if you hold one or two or a couple, not a big deal. It'll be more or less the same thing. If you start realizing you're becoming a very active trader and you want to have that freedom, do your own transactions, I can kind of call it like a first class ticket compared to a regular custodial account. It's too many bells and whistles for a lot of people, but then it's very advantageous for the right investor. So you can call us. We'll kind of walk you through it to see what might better fit your needs.
Exactly. Very good point that you brought up. If you know you're going to be an active investor, you're going to have several investments at one time, might as well set up the LLC or the trust to keep the fees down and just make your life easier going forward.
Right. So yeah, some final thoughts here. So really overall investing in a real estate syndication deal in a self-directed IRA, it does have a lot of tax advantages. Plus it's being able to use those IRA funds, which often for a lot of people are locked in something that has a certain rate of return that they don't really have a ton of control over. Using an IRA, you can pick those deals that you feel more comfortable with. You don't have to touch your personal, your personal salary or anything like that to
Right.
get involved. So whatever you're doing on the side, leave it, keep investing. But this IRA, it allows you to do something a little bit differently. That checkbook control account, great idea for a lot of people. Again, give us a call. We'll walk you through it. If you know you want it, we'll set you up with it. If you don't want it, you're fine with the custodial account. But either which way, we're here. We're happy to help. And I mean, Will and I, we work for both Madison side and Broad Financial, so we can help you start to finish with it.